Hi friends, today we are going to talk about a major player in the EV space, a firm which is the leading manufacturer of EV buses and tippers in India. Their stock has returned 53% over the last 6 months, 164% over the past year, and a CAGR of 110%, totaling a staggering 860% returns over the last 3 years. So, if you had invested a lakh of your money in this stock 3 years ago in April 2021, it would be worth 8.5 lakhs now. It's a mid-cap stock, at least that's what the investors have made it to, with a current market cap of about 14,200 crores. The company name is Olectra Greentech, based in Hyderabad. In this video, we'll analyze this stock and see if this dream run will continue. Can it keep delivering strong returns on investment? Is it worth investing in, or if you have already invested, is it worth holding on to? We'll dive deep to find these answers. First, let's examine the current valuation based on the stock price and see if it makes sense. This stock is trading at Rs 1741 with a PE of 186. Compare this to Tata Motors, one of its competitors, which now stands at a PE of 18.54. Interestingly, the price to sales or PS ratio of Olectra Greentech is 12.4, only marginally less than Tata Motors PE. The PS ratio of Tata Motors is just 0.88. Clearly, investors see Olectra as a growth stock and have high hopes for it becoming the leading EV automobile manufacturer in India. Let's look at the current growth figures for the firm, its revenue and profits. We'll then deduce the kind of growth this company needs to achieve to justify the current valuation. Last financial year, Olectra Greentech posted revenue of Rs 1154 crores with an operating margin of 14%. The net profit was Rs 79 crores with a net profit margin or NPM of 6.78%. Sales growth has been impressive with 110% year-over-year growth in fiscal year 2022 and 84% year-over-year growth in fiscal year 2023. However, fiscal year 2024 was a disappointment for investors due to revenue growth of just 6%. Despite this, the stock has been stable this year, moving sideways and thus retaining high valuation. So returning to our original question, is this valuation justified? What is prompting investors to buy or hold this stock trading at a PE of 186 when the industry PE is 32? What makes them believe in the growth story of this firm? Before we go deeper into growth projections by the management, let's try to understand what it means to have a PE of 184 and a PS ratio of 12.5. What kind of growth should we expect in the coming days to justify staying invested in this stock? I did some calculations that I want to share with you. Although the industry PE for this sector is 32, for the sake of this discussion, let's consider a healthy forward PE to be 40. Based on the current P&L figures for the firm and the present stock price, let's calculate how many years it will take to reach a forward PE of 40 from the current PE of 186. For fiscal year 2024, the earnings per share or EPS was Rs 9.36. If the current PE based on this EPS is 186, what should be the EPS increase to in order to achieve a forward PE of 40, assuming the stock price remains constant? That would be 186 by 40 into 9.36, an EPS of 43.5. So the EPS needs to grow to Rs 43.5 per year or become 4.65 times the current EPS in that year. Based on the current figures for the sales and profit of this firm, I calculate the time it would take to reach this future earnings figure. Since we have 8.21 crore shareholders for Olectra, we need to use the formula desired earnings equal to desired EPS into number of shareholders. This works out to be 43.5 into 8.21 equal to 357 crores of earnings. Assuming 10% NPM, we can see that Olectra needs to post a revenue of 3,570 crores and 357 crores in profit to achieve EPS of 43.5. I hope this is clear. With the present revenue at 1,154 crores, Assuming a 75% year-over-year sales growth and 10% NPM, it will take 2 full years from now to post a EPS of 43.5. The formula used to calculate this is on the right of me. If you assume 50% year-over-year sales growth, it will be 2.8 years to reach this figure. However, let's consider a more realistic NPM of 7%, given that NPM was 4.74% in the most recent quarter ending March 2024 and 6.8% for fiscal year 2024, which was their highest margin in recent years. Since we need to post 357 crores of net profit at 7% NPM, we need to make 357 by 7 into 100, which is 5,100 crores of sales. At 7% NPM and 75% year-over-year growth in sales, we would need 2.66 years to our desired EPS of 43.5. With an average of 50% year-over-year growth, it will take 3.66 years to reach this figure. Hence, with Olectra, investors are playing a long game, waiting for big and sustainable growth. Now the question is, does Olectra have what it takes to deliver such growth and margins in the next 3 to 4 years? Let's hear what the management's guidance and confidence is for fiscal year 2025 and beyond. The company had a challenging year in fiscal year 2024, delivering just 550 buses and tippers. However, the management insists that fiscal year 2025 will be a much better year. They expect to deliver over 2,000 buses in fiscal year 2025, and by fiscal year 2026, the target is 5,000 buses. The goal for fiscal year 2027 is delivery of 10,000 buses. If all goes according to the plan, the revenue for fiscal year 2025 is expected to be 4 times that of last year's revenue, 10 times in fiscal year 2026, and 20-fold increase in revenue in fiscal year 2027. Management believes that the revenue posted is proportional to the number of e-buses rolled out, hence these estimates. If Olectra succeeds in meeting these targets, the current valuation is quite attractive. Remember, we only assume max 75% year-over-year growth for our forward PE calculations, while the management is talking about a staggering 400% year-over-year growth in fiscal year 2025 and 150% year-over-year growth in fiscal year 2026. So if all goes well as per their plan, forward PE of 40 that we are aiming for should be reachable within the next 12 to 15 months. My calculations were more conservative and with a high margin of safety based on the past performance of Olectra. So where does this management confidence come from? Let's find out. The present order book for Olectra is about 10,900 e-buses, with the majority to be delivered to government transport units like MSRTC and BEST in Mumbai. To meet the demand and to scale up production, manufacturing has been moved to a brand new factory built on 150 acres near Hyderabad. This is reportedly the world's largest EV bus manufacturing facility, currently partially operational and rolling out buses on a trial basis. Only about 30 e-buses have been delivered from this new facility so far. Full-scale production is expected to start around July this year. Olectra expects that the first quarter of fiscal year 2025 to be subdued due to teething issues impacting production at the new facility. The current estimate is that they will be able to deliver only about 130 to 150 buses in quarter 1. Production is expected to ramp up only in quarter 2 of this fiscal year when the new facility becomes fully operational. From July, the aim is to deliver 200 buses per month, all from the new facility. The production is expected to be increased further in the next fiscal year. Management expects to deliver 5,000 buses per year from the start of fiscal year 2026 and 10,000 e-buses every year from fiscal year 2027. This is a significant increase compared to the capacity supported by the old facility, which was about 1,200 to 1,500 buses per year. To cut the long story short, Olectra Greentech can deliver on its promise of stellar growth if things go smoothly at their flagship factory in Hyderabad. The EV bus market is expected to grow exponentially in the next 5 to 6 years, with the central government planning to replace about 8 lakh diesel buses with zero emission EV buses by 2030. In addition to this, state transport units have announced big plans of their own. For example, UPSRTC of Uttar Pradesh wants to deploy 50,000 electric buses. MSRTC from Maharashtra has already awarded the contract for the delivery of 5,000 buses to Olectra, with another 3,000 e-buses order coming from West in Mumbai. However, do note that the company faces several hurdles like changing government policies, dependency on government transport units, and competition from big players. The requirements that all e-buses go through safety certification have already significantly impacted the firm this year. New battery norms put in place by the government led to production delays and supply chain constraints. This caused the company to lose 2 quarters. While the guidance for fiscal year 2024 was 1,200 buses, the firm managed to deliver only about 500 buses. New requirements like Make in India are being planned that may impact future production as well. So you can now see why my future estimates were conservative with a high margin of safety. The next major risk is competition. The e-bus industry has big names with deep pockets like Tata Motors, Ashok Leyland, Hyundai, Eicher Motors, BYD, etc. competing with Olectra. Many of them are already successfully bidding on the tenders being floated by the central and state governments. While Olectra Greentech struggles to scale up their operations in the new facility, any delay in delivering the present orders can lead to their cancellation or modification. The order book can shrink accordingly. Further, when the timelines for delivery are moved due to production delays, the cost of manufacturing may go up beyond the price agreed upon in the contract awarded to the firm. Also, the firm is raising their debt by 500 crores this year to help launch their new facility. The loan is expected to be disbursed in next few days by commercial banks. Accordingly, even if the revenue shoots up, the earnings can be impacted due to the interest on debt that needs to be paid to the banks. So coming back to the original question, is it worth investing in Olectra? The company has tremendous potential, no doubt, and the underlying macro conditions are extremely favorable. Based on the current situation, I would take a position now and build on it in the coming days. I would keep a watch on the status of the new facility, how soon they ramp up their production in that facility, and invest accordingly. So friends, that's it for today. Thanks for watching. Have a great day.